In just 10 minutes, I'm going to be breaking down this exact system slash strategy that I've been using day by day to trade gold that has made me thousands of dollars. And this is the exact system that I use every single day to trade live with my trading community. If you guys know me, you guys have been trading live inside our Telegram, which I've been sending out signals with this exact system, right? So this is a system, once again, that I use every single day to trade gold. And this system right here is very, very simple, right? I call it the 5-step system for one reason, simply because there is 5 simple steps that you guys need to follow every single day, right? Now, this system here, the big benefit about this system here is that it's going to reduce all the negativity, all the stress that everyone has with trading, which is, waiting for the perfect entry or, stressing, waiting for price, price is leaving their direction and they're not able to get into the markets, right? This strategy here or this system here, I use it as a stress relief because I'm not chasing the market, right? I'm basically just lining up everything here and just waiting for price action to come into my areas of interest so that I can be taking my trade. So it's very, very simple and not hard to understand. This 5-step system, I'm going to explain it to you guys, and I'm also going to put it into a test in this website that is called the FX Replay, right? It's basically a back testing website. So we're going to be basically doing all of this entire steps so that you guys can go along. And we're also going to be putting it into the work inside this exact website. So over here, trading gold, right? I trade gold every single New York session, which starts at 8 in the morning, right? So I do recommend you guys to do this at 8 in the morning. You guys can also do this whenever there's high volume, like London session is another good session to trade the gold. I do not trade gold during the Asian session or during any type of session due to the fact that there is low volume, right? This system here works with very high volume markets, right? Which is again, the London session overlapping with the New York session. So the 5-step system, right? We're going to go with the first step, which is doing the top-down analysis, right? You guys are going to look for your buys of the day. And this is basically a higher time frame, right? So you're going to start off from a higher time frame to find the overall trend and the buys of the markets, right? So very simple. What is a trend and what is the buys of the market, right? The trend is basically where is the market trending? Is it trending towards the upside, creating higher highs or higher lows, or is it trending towards the downside, creating lower lows and lower highs? The buys, are you guys going to be looking for buy position or are you guys going to be looking for selling position, right? And it's very simple, right? This strategy system also aligns a lot with market structure, which I'm going to be making a video, an updated video, how I trade market structure and how to properly understand market structure this new year of 2026, right? So over the years I've been trading, right? I have mastered every single topic or every single section with trading. So I do want to give you guys an update so you guys can pretty much align with what I'm looking for, what I'm pretty much doing on a day-to-day basis. So I'm going to top step number 1, which is the top-down analysis, right? So we're going to start off from a higher time frame perspective, right? I do this every single day, which I start off from a daily time frame. And in the daily time frame, what I do a lot is pretty much mark up the previous day highs and the previous day's lows. There's 2 main reasons. It's going to be zones that price action can come back towards this area to possibly use as liquidity sweeps so they can continue the opposite direction. Or it can also be zone that price action can be used as potential targets, right? So in this case right over here, we're going to mark up the previous day's highs, which is going to be this exact wick, right? Again, you guys want to do this from the body wick. And you guys always want to make sure that you guys write it down. So this is previous day's highs. We're also going to mark up the previous day's lows, which is the same thing on the bottom wick. Previous day's lows. Very simple, right? And we're going to be now focusing on what current price action is doing in today's market. So we're going into step number 1, which is, hey, we're going to start off from a higher time frame to find the overall trend. Step number 2, which is mark up your weekly highs and lows and daily lows to identify, again, the trap zones and potential target zones. So that's exactly what we have done so far. So we're going to go back here into the FX replay. We already marked up the previous day's highs and the previous day's lows. Very simple. We're going to go into the 4-hour time frame, which also aligns with a higher time frame structure. And we're pretty much going to look exactly what price action has been doing these past couple of days. So in this session here that we're trading New York session. This is a Thursday, right? We're going to start off from the beginning of the week. So we're basically going to go here on the weekly time frame to see the weekly lows. The weekly lows of this current session is going to be all the way down over here. So we're going to also underline this. This is going to be weekly lows. Very simple. So starting off from the weekly, we're going to go into a daily time frame, pretty much see exactly the trend of the market, right? So we notice that This week right over here, which is the new current week lows, we did see that price action had a nice impulsive move towards the upside, right? Which means that on the lower time frame means that we are creating higher highs and higher low structure. And if we basically go a little bit more deep into context, right, we can see exactly where price action started having this entire bullish move towards the upside, which basically happened right over here, which is December 31st, which was a Wednesday. You guys can clearly see these lows. And if you guys look towards the left side, we can clearly see that price action had a strong reaction towards this exact demand zones right over here. So you guys want to make sure you guys want to go into a higher time frame to see exactly where this demand zone pretty much started, which was this exact zone. It's very simple, right? It's just basic market structure. So you guys want to underline this point over here, which is going more deep into context, right? This is just for educational purpose, right? So we can go here on the daily time frame. We can clearly see that the market had a nice imbalance push towards the upside, which is pretty much a nice bullish move towards the upside, and price action had a strong retracement towards the downside, which pretty much came back towards these exact lows, right? This is where market structure plays a huge part, because a lot of traders, right, especially beginner trader, will probably see this exact bearish move that happened on lower time frame, and they will say, hey, you know, price action is now switching the structure from a bullish market to a bearish market, which is wrong. No, if you guys take a look at this from higher time frame perspective, which is daily time frame, you guys can clearly see how price action respected all of these entire daily lows, right, which is also daily demand zones. Going into the weekly time frame, we can also see how on the weekly time frame we did had a bullish structure move. So let me just grab a pen here, or let's just do an arrow. You guys can clearly see how price action had a nice bullish move towards the upside, breaking above all of this entire weekly structures, right, which is going to be considered as a break of structure. So we broke above all of this entire previous weekly highs, which again, another way to say is the weekly resistance zones, which price action has now had a retracement to come back and retest. You guys can clearly see how on the weekly time frame we pretty much rejected the zones and we closed above. Good, already a good sign of bullish, right? Now going here on the 4-hour time frame, right after the market opened up again on a Sunday market, we had another minor break of structure, which is going to be underneath or pretty much above this entire week 4-hour highs, right, which is going to be considered at the 43.90. So we're going to pretty much underline this. We're going to put this into, let's just put this orange, right? This is basically what happened on the 4-hour time frame, the beginning of this week, which we pretty much had a week daily, or my bad guys, 4-hour break of structure right over here, right? Boom, after respecting all of this demand zone, and we also pretty much broke above all of this entire weekly structure, which was all previous areas of resistance. Good. So we already understand the price action is in a bullish market, right? Now, we can see that throughout the entire week, right, which is going to be this highs right over here, which I do believe this is going to be considered as the weekly highs as well. Yeah, it's going to be considered as the weekly highs. We can see that price action after having a nice bullish move towards the upside since Sunday all the way to Tuesday, we did tap towards a supply zone, which is going to be right over here, right? A supply zone right over here, which price action had a pretty much rejection and caused the market to decline, right? Now, once again, this is where market structure plays a huge part. This is not a bearish market. The market is still holding above all of these entire lows, right? So again, the market is not going to be considered bearish market until we finally break underneath all of these entire zones. Notice exactly where price action had a reaction from. It had a reaction from these entire imbalance zones, right? An imbalance is pretty much whenever market had a nice spike towards the upside, and price action likes to use these zones as magnets so that price action can have liquidity towards these lows over here to actually continue the actual move that we're looking for, right? So going back here to these steps, we have already identified the trend, which the market in this case over here, we are trading a bullish market, right? That's step number one. Step number two, we already marked up the weekly highs, weekly lows. We already identified them as potential traps, right? And potential targets as well. In this case over here, we can identify the traps, right? Which is trap zones. If we go back here towards the daily time frame, we can see that the previous daily lows has been used as a liquidity sweep. And this is exactly what I meant for you guys, right? This is step number two, identify the traps, right? In this case over here, we use this level or previous day's lows as a liquidity zone where price action just simply swept out the lows to potentially continue pushing the market back towards the upside, which is exactly what we're looking for since the market is still bullish, right? And again, market structure, we have highs and we have potential higher lows. Same thing here on the 4-hour time frame. We can see on the 4-hour time frame how the market structure is just simply creating higher highs and higher lows. So we have highs, we have a low, high, higher lows, and then we have a higher high, higher lows, higher highs, and now potential higher low, retesting demand zone. So again, market structure is bullish. Now, step number 3, which is intraday key zones, break of structure, supply, and demand. So you're gonna highlight structure breaks and smart zone that aligns with our bias, right? So our bias is buy position. We're looking for a bullish market, right? So now we're gonna basically highlight smart money zones, right? And we're also gonna highlight break of structure, right? So since we're looking for buy position, our main goal is to look for a demand zone. Demand is bullish, supply is bearish, right? So we're gonna be looking for demand zones. So we pretty much already marked out the previous day's highs where market structure had a pullback towards this level, and we are kind of seeing a bullish reaction from it, right? And you guys can also see it from previous day structures, right? You guys can clearly see it from here how we did had another push towards the downside and price action had a bullish reaction, right? And once again, we're coming back towards this level, which price action has retested multiple times. And when I say retested multiple times, you guys can clearly see it. One retest or pretty much 2 retests in these zones over here, and then we also have another bullish reaction retest right over here. Very simple, right? So now going into step number 4, which is identify the imbalance that shows where price action may return before continuing the upside, right? Because again, we already identified all these entire steps, right? So we're just gonna write down the notes so that we can keep this in mind. So our bias is bullish, right? We're going to be looking for a potential buy position. Why? What is the main reason why we're looking for potential bullish, right? Simply because price has pulled back. We're going to write this down. Price has pulled back into higher time frame key zone, which is going to be considered at 44.24, right? Which is rejection of H1. We're going to go back here into the 1-hour time frame, which is a rejection of the H1 time frame imbalance zones. This is also considered as a bullish fair value gap. So rejection of H1 FVG zone. We're going to write this down. Bullish fair value gap zone / imbalance. And then obviously price action has shown multiple liquidity, right? So step number 4 and step number 5 is basically the last final steps, which is now identify the imbalance zones, right? Because this is basically where we're going to be looking for our potential entry. Step number 5 is just basically waiting for the rejection and the entry, right? So obviously we need to wait for a clear rejection and the confirmation before entering your trade. So step number 4 and step number 5 is very, very important for you guys to align, because this is where either you get stopped out early because you want to enter the market right away, or you just don't get an entry at all, right? So this is very important. You want to wait for the best entry to happen. So as of right now, we have clearly seen that price action has respected these lows. We have obviously seen that these lows right over here are being respected, right? Now there's going to be multiple ways that we can actually enter this trade. And the reason why I say multiple way is simply because this is the main reason why. Notice how price action has came back towards this level. We saw a minor bearish reaction from it, right? Means that market is still trading inside these ranges. What is the possibility of price action coming back towards this level and having the same exact bearish reaction, and then boom, we can get taken out of this entry very soon? It's going to be high always all the time, right? So what is the best way to enter the market? We need to again identify a fair value gap zone, which is going to be on the lower time frame. Or another good way to enter the market is going to be, the classic break and retest, which is going to be simply a break and retest above these highs right over here. So far we have seen exactly what we wanted, right? Now we're just going to wait for the market to basically do or give us the entry that we're looking for. So we're going to put this into a 5-minute time frame or a 5-minute time. And we're just going to skip it throughout to see if we get our entry, because as of right now, there is no entry at all. So let's see. Let's see what happens here. This is what time we're trading. We're trading 11 in the morning right now. Let's see. There's still no entry price. It's still ranging. This is why it's important. Again, you do not want to be trading the ranges, right? So let's just kind of underline this right over here. This is our no trade zone. There's no anything that shows us that the trade is ready to go. So we're going to make this a little bit smaller. Look how price action is coming back towards this level. So once again, we are retesting this key zone. Let's see what happens. Boom, broke up to the downside, right? This is very important because look at this. Imagine if you guys, because yes, we got everything we wanted. Imagine if we would have entered the market right over here and we would have our stop loss placed underneath these lows. Look how easily we would have gotten stopped out of this trade. There was no reason for you guys to be entering this trade, right? There was still a lot of fake push towards the upside. There was no proper imbalance here, or there was no proper break of structure. So there's no good trade for us to enter the market, right? We might be even wrong with the entire bias, right? And basically, if the market does end up closing underneath these lows right over here, that means that our trade is no longer valid, and all we simply need to do is just simply react and adapt, which is now switching the bias, right? We're gonna wait for bearish price action to form up and basically wait for the same exact thing. But as of right now, nothing is going on. Let's see what happens. Okay, we have a candle closure. Price action is coming back once again. This is very important. We have to see exactly where price action had a reaction from. Look at this. We had a pretty much a deeper pullback towards this hourly key zone, which is the exact areas of interest of the day. And notice how we just simply once again grab liquidity. This is perfect. This is literally a whole game of just patience, right? So we have the 1 hour liquidity sweep, a nice 1 hour candle closure, which is very nice closing above, right? So now let me ask you guys a question. Will you guys enter the market now? Of course not, right? Because again, we're basically coming back towards the ranges, right? There's no point for us to be trading the market, right? This technically right now is happening is the accumulation, which is the ranging market, a manipulation towards the downside. This is where two traders are getting stopped out. Early buyers are getting stopped out, sellers are getting stopped out as well. This is why it's very, very important to be patient and just wait for all of this to happen, right? We already identified step number 1, step number 2, and step number 3. Step 4 and step 5 is what we're waiting for. And again, the market's not always going to give us opportunity, right? But if it does give us the opportunity that we're waiting for, which is all of this, then yes, we're going to be taking the trade, right? So let's see what happens. So far, we're just basically ranging a little bit. We're breaking back above structure, which is good. This is exactly what we want to see. Let's see. Look at this. This right here could have been a potential entry as well. We could have gotten an entry right here, but it's not what we want. It's not high quality yet. Let's see what happens here. Boom. We have a 5-minute break of structure, which is ideal. Right over here. This is nice. We're coming back, retesting it. Another bullish reaction from it. This is good. Let's see. We're just waiting now, guys. So just notice how price is still just ranging. Let's see. Boom. This is the exact candle that I like right here. This is the exact candle that I like looking for always. So let's go into higher time frame to confirm. So we're going to go here on the 30-minute time frame. Let's see what happens on the 30. 30, we have, oh, my bad. 30, we have seen multiple wick rejection towards the downside. We're seeing that a support is being formed. We have a nice 30-minute liquidity sweep. If we look towards the left side, we have a liquidity sweep towards this exact fair value gap zone right over here, high time frame zone. We have a liquidity sweep towards this level. And you guys can clearly see how many time price action has retest all of this entire key zone multiple times. So it's really showing us that our bias is correct. All we're just simply waiting for at this point here is just our entry confirmations, right? So going into step number 5, which is identify the fair value gap of a 5-minute time frame, identify the imbalance where price action may return. And this is exactly where a zone that price action can definitely return back into, because this is the nice bullish reaction that we're basically waiting for. So we're going to underline this. This is going to be our entry confirmations. And if you guys go in the 5-minute time frame, you guys can see how the 5 minute is already building up very nice bullish structure, right? So again, we have the accumulation, the manipulation, and now we're having the distribution. We have a high, a low, a break of structure, highs, we have a higher low, and a new higher high. Now we're waiting for a higher low and then enter the market. Boom. That's exactly what we're going to wait for. So this is the exact candle that we want to wait for, right? Now, it's going to be considered risky due to the fact that we're still trading underneath this key zone, right? So again, keep this in mind. Trading is just all of a game of probability, right? We got everything that we wanted that aligns with our system. So now we have the rejection. We already got it. We're just waiting for our entry confirmation, which is exactly going to be this one. So what we're going to do here is that we're going to set up a limit. We're going to place the order. We're going to have a buy limit. We're going to set this up at 44.32. Save the journal. We're going to have our long position right over here. Our stop loss is always going to be placed underneath the previous hour candle. So the previous hour candle, we have all of this entire wick. So that's exactly where our stop loss is going to be placed underneath right over here. and we're gonna move this here, and then our take profit is gonna be above weekly or previous days highs, right? We can have multiple take profits. This can be take profit 1, which is gonna be a 1 and 2. Or my always take profit is always gonna be at a take profit 3. But like I told you guys, right? Weekly daily level can be used as potential targets and identify as a trap zone, right? In this case over here, since I'm showing you guys the example, we're gonna put the previous day's highs as our final take profits, right? And if the bullish market continues, then we can obviously just wait for the same setup above all of these entire key levels right over here if it does get broken above, right? So now we already got everything we wanted. Nice structure, nice rejection towards the key level. All we're waiting for now is just for our entry to get triggered, which is our buy limit. And this is exactly how I trade. I'm basically waiting for everything and just waiting for price to reach my zone and then enter the market. Very simple, stress-free. There's nothing that you guys need to be waiting in the market. Just wait for the market to give it to you. So let's see what happens. We're gonna put this into an hour and we're just gonna put play. Let's see what happens. Okay, oh look, it looks like we're entering the market already. Let's see what happens. Let me just kind of put this a little bit higher. So we got exactly the reaction. Oh, my bad, guys. So we got exactly the reaction that we wanted. Notice how price action is kind of rejecting off this minor supply, right? The idea is that if price action does break above it, we're just going to simply repeat. We're just going to repeat the same exact system, but just above this key level. But let's see. Boom, broke above structure. That's the idea. All we're waiting for is just for price action to potentially pull back towards this level, build up better price action, and then we can enter a second entry. Let's see. It's pulling back, having a bullish reaction. As you guys can see, we're having the, I bet if we go here on the 30-minute time frame, it's going to be the same exact candle that we waited for, which is going to be something like this. This is potential, right? This is exactly what we want to look for. This is potential. These are all buy zones right over here. Let's see if this trade plays out fully. We're closing above. We're retesting the zone. This might be a low structure zone. Look at that. We're perfectly rejecting it. I'm not going to enter this trade, but this is technically what I would have done. Let's see. Boom. There you go. Take profit smash. See this, guys? Very, very, very simple, right? We did not force a trade. We waited for price to give us pretty much everything that we wanted. We identified the top-down analysis, we marked up the key levels, we marked up our major structure from intraday zones, which is, again, the intraday zone is going to be all of this entire level that we marked up, period days lows, and we just waited for the market to give us what we wanted, the liquidity sweep and our entry confirmation. The entry confirmation, which is pretty much identifying the imbalance where the market may return before continuing, and then we also have the rejection, which is you wait for the clear rejection and the confirm before entering the market. Boom, we have rejection of major key levels. We got the accumulation, distribution, the accumulation, manipulation, and the distribution, and we got the exact bullish price action that we wanted. The same thing that happened right here. This was choppy price action once again, right? So I'm lucky. This is pretty much lucky that how the trade did play out very, very nice. This was very choppy price action right over here, but this is exactly what I would like to trade, right? If you guys kind of go here on the higher time frame, you guys can see that it happened exactly right over here. So everything that we got here on a lower time frame also happened on a higher time frame once we broke above this key level. We have a nice hourly imbalance candle towards the upside, a nice bullish break of structure right above here. Nice bullish structure break above right over here, and a pullback towards the imbalance, a pullback rejecting multiple times, maintain as a support, and we got the nice entry confirmation, which could have been somewhere underneath here, and then you guys could have also entered another market position right here. And as you guys can see, we did play it out very, very nice, hitting our final take profits. So this is the exact system that I follow every single day, and this is the exact system that I trade with my entire trading community. So I hope you guys enjoyed this video, enjoyed this entire breakdown. How exactly do I trade gold? This is the exact system. If you want me to go a little bit more deeper into, pretty much just breaking down step by step, how do I pretty much, let's go here, how I, do my top-down analysis correctly, how I mark up the weekly and daily lows, and how exactly do I use it for traps, zones, and target zones. I can make a lot more videos for you guys to actually break this down step by step. So we can do a video for top-down 1, we can do a video for 2, 3, 4, and 5. So this is something that I'm going to be working on for you guys, so that you guys can pretty much just follow how I trade gold. So once again, I hope you guys enjoy, and I'll see you guys on the next one.